Good morning, traders. It is 8:02 a.m. Chicago time. It is Wednesday, August 13th, 2014. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. As always, that's a required disclaimer. I have to read that every day. It's for your protection. Looking at the overnight news, lots of numbers, lots of news. ECB's Weidemann says France must set example with its budget. Crisis isn't over in Eurozone. German decisions on pensions go in wrong direction to support growth. UK June 3-month ILO unemployment in line at 6.4%. UK June average earnings missed to negative 0.2% versus consensus of negative 0.1% consensus. This was the first decline since 2009. Interesting to note. Reuters inside article says that Yellen is determined not to hike too early, would rather combat future inflation than another economic downturn. Japan Q2 GDP small beat. China's July retail sales, industrial production, fixed asset investment, new yuan loans, and aggregate financing all missed. Not by too much, but they still missed. Aggregate financing came in at 273 billion versus 1.5 trillion. It's quite a big miss. The BOE slashes its Q4 2014 annual wage growth forecast to 1.25% versus 2.5%. This caused the British versus the US to come under pressure based selling and falling to early June levels. In the European indices, EON and Merck beat earnings expectations, causing a pop in the Euro indices overnight and supporting a move higher. U.S. retail sales came out at 7:30 this morning, Central. Missed, came in at 0.0% versus 0.2%. In about 1 minute, we're going to get Fed's Dudley's comments. And then at 8:20, which is about 15 minutes, 16 minutes, we have Fed's Rosengren. At 9 o'clock today, a half hour after the open, we have business inventory 0.2%. And at 9:30, crude expecting negative 3 million. Gasoline inventory is expecting negative 3 million. And distillates expecting negative 2 million. At 12 o'clock today, we have a 10-year note auction, 24 billion, again, all-time Central. We still have a few things for tomorrow. ECB's monthly report, U.S. initial claims, and a 16 billion 30-year auction. Let's look at what the market did yesterday so we can figure out what it's likely to do today. So this is yesterday's trading here. We opened just outside of, if you recall, during the trader bite, we're at the bottom end of Monday's range. And my point during the trader bite is that the Monday trade and the way the profile was left behind left a pretty weak low with the point of control right at the low. The expectation is for it to test lower. Expected 28.25 and 23.50, 23.50, 23. For a test, if it does go lower, there's a gap zone here between 32. What is it? 31.25 and 28.25. There's a gap zone which I noted here. You'll all of this, of course, you can go view. Review on my YouTube channel, youtube.com/ I think it's FuturesTrader71, and just look at the channel and you can see yesterday's video. It'd be interesting for you to do that, in my opinion, if you're trying to figure this auction thing out, how I'm using profiles and stuff. It'd be interesting for you to watch yesterday's video and see what was predicted or what was expected of the market, and then look at the chart like we're doing here and see how it played out. It'll help you solidify the idea of just looking at what the context is setting up to do and then playing the most likely playing on the side of the most likely outcome for the session. So essentially what we did is we opened out of range. Surprisingly, what I did not expect is an open test drive. It opened right at 30.50 and it dropped very quickly to 28.25. Pretty decent delta on the drop, and then a buyer stepped in, very aggressive. If we scroll back here, the delta for this buyer was very strong, from about negative 2,000 to about positive 6,000 or 7,000, something like that. But this was classified as an open test drive opening type. An open test drive means that there's a higher time frame in play. You do not want to, normally you don't want to fade an open test drive, especially into new territory or when it's moving away from prior value. This was not the case. This is where context is a slippery thing and a frustrating thing for some traders to get a grasp on. This open test drive was right into prior value. So the thing to watch, and I think I tweeted this out, was 35.50. Right? In the morning I said 35.50 is likely reaction area. So it pushed to 35.50, which is a closing swing high, and the low volume node from yesterday. There's no magic 8 ball here. It's all right in front of you. I'm looking at the same information you are. A nice 4-point rotation to the opening swing high, which I set at 31.50, although in an open test drive it is hard to have an opening swing high, but I saw this pullback here, this reaction, and I marked it. The market happened to pull back to it. Remember, 31.25 was the prior day's low. 31.50 went to 36, and then it just could not push any higher into that value area. And this is when I started to say, uh-oh, caution below. I'm not sure if I did that on Twitter or in the S5 chat room, but I did say caution below, and it rotated back to the opening swing, got tangled up in the VWAP, came into the opening swing again, tried to get out, and then from there it's just lower. And as it pushed lower, the expectation, as discussed in the morning, was for 23.50, and lo and behold, the low of the day, 23.50. Where do I get that number from? Very simple. Here it is. It's the gap close. 23.50 is the gap close, and it is the MC point of control. 23. That area has a little bit of confluence. If since it bounced at 23.50 for the afternoon, my bias actually was, because the point of control was down at 26. Since it bounced at 23.50, the quality of the move up and the context of what we did, rejecting this this area up here on Monday, I actually expected it to slip down to 20, and then a break below 20 would put us in this low volume node, which would take us to 15, with 17 being the key area here. This is an LVN zone here that was left behind on Monday or on Friday, and my expectation, frankly, was for the 23.50 to take us back up to the IB low at 28.25, and then for it to move down. The supporting reason also is because once it pushed into 23.50, it put us inside of the Friday range, and we had gotten below the point of control of Friday. And so my expectation is for it to test the other side of this high volume node, which was at 23.50, down to 20. And it didn't do that. It started to creep up, and it pushed all the way back out of Friday's range, and then bounced off of the opening swing high again from below and got stuck in the gap zone. Okay, that's how yesterday shook out. Very interesting profile. It's very, very odd. There's really there's an odd quality to the trade yesterday and Monday. Very slow, but very sticky. It tends to move to an area, trade, and then move to another area and trade very bizarrely. See these high volume nodes here. Just very strange how it's all being executed in a very tight one or two prices. So there's not a group consensus on value. There's almost like a single or small number of players just executing at very tight ranges. That's what it looks like to me. Today we're opening, we're at 36 and a quarter, 36. We're at the upper end, so we have basically left Friday's range behind and are back into Monday's range, with the high overnight being Monday's high. So essentially what we're doing today is we're templating Monday's trading. So the expectation for today, the higher probability, in my opinion, for today is, oops, what did I do? The higher probability for today is for us to push to 24. I don't know. I hit a key, and this is what happened. For us to push to 45, that's the expectation for today. This was the expectation for Monday, held at 41. Now we've gone back, tested Friday, moved out of it, so the context is supporting a higher trade today. It's got plenty of support below it. It could test all the way down to 30, 30 and a quarter for the point of control. There's some support at 31.50. If it gets into 31.50 and pushes through, then I'm looking for a retest of this 26.50 area. But I think the higher probability is for it to continue higher into 45 for today. Let's look at the overnight to see what happened there. The overnight, here's the European Open, and given the news across Europe, fairly bullish. The markets ended up pulling back here in the later in the recent hours here, but overall pretty strong. A kind of a weird looking P-shaped profile with the bulk of the volume on the high end. The market looks like it has a weaker high. I would expect that if it falls below the 32.75, 33 area, then it will probably visit that point of control again that I just talked about at 30. But I think it's likely to find support and continue higher. It'll be interesting if it does not, by the way. If it does not find support, given what it's done over the last couple of days, if it does not find support and go higher, that'll be an interesting indication for the sellers in that situation. So here's the drop on the 31st. We've tested 1900 by a tick to 1899.75. We found buyers the next day. We found buyers on Monday. Sellers on a pullback. Very, you could see the range was pretty low here. 1250 volume's pretty low, and then I see this as a pullback, and I see this getting ready to continue higher to 45. 45.75 is the low of this balance zone, and it's an area that's been tested and retested in the past. I expect some resistance on the first try at 45.75 this morning, but that's where I think the target's going to be. Now, I say that, but I am wide open to anything else, to whatever the market throws here. If the market tries to push higher and is unable to, and starts to move back into the range and takes out the overnight low, then I'm expecting a test to 26 and chop essentially. If it takes out the 26 and starts to walk towards 23.50, then my next target will be 20 as discussed. 20 is the beginning of the LVN zone, and then 17 beyond that, 15 beyond that. These areas, this beginning of the LVN zone, the CLVN at 17, and 15 is the other end of the LVN zone. This area here has been thin all along, very little volume trades in this zone, so I expect that to be support. I'm ready for that, but I think the way this is shaping up, the way it's setting up, it's looking like 1945 is the likely target today. The other thing to note is if I pull up my trigger chart and look back, pretty much every day we have sold off on the close. We have sold off with strong delta on the close. Here's another day. Here's another day. Sold off on the delta on the close. You can see the delta down here, negative 41,000. Here's another day. We sold off on the delta. I've mentioned this, been mentioning this all week. Also last week, look at this sell-off right on the close. Between about 2:55 and 3:15 in the afternoon, Chicago time, right before the stock market close, we've been a seller. Here's another seller, big seller here. Here's another seller. Look at that delta drop on the close. I'm sure you get the point. Delta drop, a little recovery, but the drop is really big still. Massive delta drop here. Delta drop, you get my point. But look at yesterday. Yesterday, strong buyer into the close. Right into the close. And then there's nothing. It tried to drop, but there was nothing. So keep an eye on that. Not 100% sure what that means yet, but it's important to note. I think something's changing. I think the buying may resume from here, depending on how far we reach. If we push through 45, 75, 46, then we're in the upper balance. Then we're in this upper balance area. Then you start to look at the levels from up there, and the levels up there beyond 45, 75, you have 53 HVN. We've tested and retested this area a lot. Next comes 65. Then we have 7150, which is the microcomposite point of control. We get through the microcomposite point of control and stay bid, then new highs are on deck with a high probability. The question is, do you follow all this? Can you do this all on your own? That's really the goal of these trader bites. The trader bites are intended not to create some sort of a dependency relationship between you and I or the information I'm offering. The goal here is to help you see that the market, no matter what market it is, I could pull up a stock right now and go through this and it'll be exactly the same, except with stocks, you have to reduce the granularity. Stocks trade in pennies. When I started trading stocks as a SOS bandit, we used to be in teenies. And now, because it trades in pennies, you get a lot more noise in the profile. So with stocks, you have to use some smoothing, or you have to change your price scale into dimes or nickels, depending on the stock and how much it moves. But essentially, it's the same relationship, the same auction that takes place. There's a product, it has a certain amount of demand, it has a certain amount of supply. Stocks are a little bit different because the supply is limited. There's only so much float in a particular stock. In futures, for every bought contract, there's a sold contract, and there's an infinity of contracts, basically. But it's the same process. So you can take this. You don't have to trade the ES. I focus on the ES because it is the most popular product. But you don't have to take this in the ES alone. You can take this into stocks. You can take this into energies, whatever you're looking at. This is also a great way, in my opinion, as long as you mind your risk. As always, there's a significant risk of loss to trading futures, and it's not suitable for everybody, as I always say. But this is a great way to determine your weekly option strike prices and things like that. Basically reading what the market is doing and determining within a certain period of time what it's like, how likely it is to get to those prices based on the volume profile levels that are in the way. So you can, the whole point is here is for you to read the auction independently and to apply that to your own trading. Good luck, and I'll catch you tomorrow. Take care.